Candlesticks show you so much data, but what they don't show you are areas in which buyers and sellers like to interact, where they are finding value, where the market is balanced, and also the areas where auctions are failing, where buyers and sellers don't want to interact. And that information can be really useful in providing edge to you to understand where the market participants want to place trades, who's in control of that market. So how do we get that data? We use session volume profile. And in this video today, I'm going to show you exactly how you can start incorporating it in your trading plan so you can start getting an understanding of when the market is in value and when it isn't in value. And hopefully that will give you some edge for your intraday trading. Before I jump into the charts, do me a favor, smash that like and subscribe button right now. It really, really does help me and help the channel, and in doing so, help the community. But let's get into the charts. Basic principles of a market. You are looking to buy in good value at cheap areas, and you're looking to sell or to short the market in areas where we are outside of value, where it is too expensive for buyers to participate. And just looking at candlesticks won't provide you all that data. So the easiest way to do it is to use a free indicator called session volume profile. So let's just add that into our charts right now. So if you search for it on TradingView, you will find it. If you're using anything like Ninja or Interactive Brokers, they have it all on there. When you load it on, it will look something like this. Now, I like to make some amendments to this straight away. So the first thing I do is I change this down volume on both areas to white. Okay, and I take this histogram box right down. I'm not really interested in this. And then if you do this, it should look something like this. So let's go over this indicator now zoomed in so we can make sense of exactly what we're looking at. For me, there's 4 key things to take note of when you are using a session volume profile. The first thing is to understand what it's providing you. It is providing you data of where buyers and sellers are interacting. And the data that I'm most interested in is the previous day's volume profile. I want to understand the previous session volume profile coming into a new day because it's going to give me some edge by understanding where the market was deemed in good value, where it exhausted out, where it had failed auctions. So let's just look at the indicator in depth. You will notice that the indicator has a highlighted area and a shaded area. The area that is highlighted right here, you will see it's brighter than outside of it. This is known as your value area. This represents 70% of the price action. Okay, so where 70% of buyers and sellers participated is known as the value area. Outside of that, you have auctions which were not sustained. Okay, these are failed auctions outside of that. These are the areas where buyers and sellers want to participate. Buyers failed to take the market and hold the market higher, and sellers failed to take the market and hold the market lower. So the extremes of these areas, okay, I can actually put these on the indicator. We have a value area high, which will always be the top of this, and we have a value area low, which will always be the lower side of this. Okay, so it's important to understand this value area. So now you understand the value area high and the value area low, we can get onto this red line, which is known as the point of control. Now, the point of control represents the area in which most volume was traded. That's the key here, most volume by either buyers and sellers or both, okay? These are the key principles of understanding session volume profile. By understanding that, we now understand where the market is deemed to be too cheap or too expensive or at good value. The market is always one of those three options. If we just think about auction theory, the market will slowly move up. If buyers feel like the market is too cheap, they will keep bidding it up. If sellers take control and feel like the market is too expensive, they will trade the market down. And if buyers and sellers are in agreement that the market is at good value, it will find consolidation inside an area. That's how the market moves. The other thing you need to understand, other than this point of control, are other high volume nodes. What do I mean by that? When we look at this histogram here, all right, we can see that this is the biggest area of volume represented horizontally with the point of control, but we also have another node down here. All right, so this is worth taking note of. Yes, it's outside, in this case, of the value area low, but there was definitely a lot of volume traded here. Now, my guess would be that it was traded negatively through here. Lots of sellers came in, and then lots of buyers came back in the other side and bid it up. So right now, above this area, buyers are in control above this area. And that's how I like to use session volume profile. Like I said, I'm always interested in the previous session volume profile. Why? I just want you to think about a bull market, a bear market, and consolidation, as we talked about. All right. So if we just draw this out very, very quickly, a bullish market will move like this, okay? And a consolidation will be here, and a bearish market would move like this. That means that in this bullish market on the way up, you will have points of control and value areas moving up with the market, okay, until it finds a value area at the top of consolidation, much like this, before sellers take control and move down. All right, very key basic principles of how an auction works. So when we come to the charts, then we can see here we have a large area of consolidation. Okay, we have a large value area. The next day we traded inside this large value area. The next day we traded inside this large value area. And on this day here, on the Monday, we finally traded outside of this previous area of value, signifying that buyers are starting to take control at the highs. And then we get this explosive move up. We trade up. We have a new value area above old value. We trade inside, we trade up again. Notice how the point of control is slowly moving up with each step, as is the value area, okay, all the way until we get to here, all right? This session here was Thursday. On Thursday, we try and extend the value area high, but we also extend the value area low. So when we start failing levels, what are we looking for? If you just think again about how the market likes to move, how we think about structure, we have resistance, support. We push up, we break resistance, we find support on this resistance before returning higher, okay? So this is very basic principles of S&R. Support becomes resistance. And on the way down, we might trade down through that old support and test it to see if it's resistance, all right? If this now becomes resistance, we can now expect the market to start to trade lower. And we can use value areas and points of control as key levels, much like support and resistance, because if we're trading underneath a previous point of control, that means buyers in that area are probably stuck. So coming into Friday's session, for example, let's just come in. We opened up right here. Okay, this is your 9 o'clock. And you will notice, remember, we would not have the current session volume profile. We'd be looking at this, the previous day here. So we're opening up inside of value. And you will notice we have a very clear drive right here up to what? Up to this volume node, the point of control in which the sellers come flying in. This was an area yesterday which we sold off from. It is old support becomes resistance. So it's a retest of that area and sellers come in. All right. We start expanding through the previous day's value area low. If we're going to expand through that, what do we look for? Where can we look for potential buyers to come in? We can look at previous data. So we're going to scroll back and look for old areas of value and points of control. Now you will see between here and here, we have 3 points of control. Okay. Going to delete this blue line now so you can see it. We traded up to this point of control. Sellers came in and we traded back down to these old points of control and buyers came in. Okay, so you can see how easy it is to start understanding if the market is in value, if it is overextended, or if it is too cheap. You can use these key levels for that. So for me, I am always using these auction theories on higher time frames. I really only use session volume profile on an hourly chart, and I'm only interested in the previous day and first tests. So for example, on Friday, right, I knew I could potentially get long outside of here, but coming into this area is not an area I want to be bidding the market up. In fact, I'm far more interested to see a rejection of this old point of control and a rotation back down. Now, if we held this previous level of value here, for example, into a new session on Monday, we can then expect the market to auction up and retest this whole range. So this here is a big range for me right now. This is how I start to identify key levels of where buyers and sellers are in control, both in a whole week. Okay, if we think about this as a whole week, and in terms of sessions, Friday, Thursday, Wednesday, Tuesday, and so forth. And that, if you trade how I trade, can really help you when you understand weekly models. So as a recap then, when the market is in a bullish flow, you can expect the market's value areas, all right, to be moving to the upside. And within those value areas, you will find points of control. All right. So if we do an example of this, then when the market goes through consolidation and starts to break down, we can expect these value areas to start moving downwards. And we can expect points of control to move down and old points of control, like this one here, to be retested. This is exactly what we got on Friday, right? This Thursday move and a retest just like this. And that's how you can use it to understand if you're the right side of the trade. When you're thinking about higher timeframes, you can be taking, all right, longs if price action is justifying it up to old points of control. Once those start to reject, and if you're in a pro trend and a sell model, you can start looking for that rotation back down to lower prices, back down to lower areas of value, to value area lows, to old points of control. A very basic principle here then, a very short lesson, but hopefully this will give you some understanding in how you can use session volume profile to start understanding more higher time frame key levels. Remember, if you understand where an auction wants to go, if you understand where buyers are in control, where sellers are in control, where the market's too expensive, where the market is too cheap, and where the market is in balance, it can help you with your trade thesis. You do not want to be buying a market that is too expensive and is outside of a value area. And you do not want to be shorting a market which is far too cheap and outside of a value area low. All right. Play the pro trend, play the higher time frame trend, take your plays in between these areas of value. This will give you good edge.